What's up everybody? Tom here with another video. In today's video, we'll be talking about gaps, we'll be talking about the stock market, and of course our technical analysis for the SP500, Nasdaq, Tesla, Apple, Bitcoin, and more. We just saw a very large candle come out of the US markets, and of course this is anticipation of the earnings season and a possible reversal of the downtrend or the correction that we've been seeing right now. So the question is, do gaps always get filled? Because we just had a big one on the US stock markets. Stay tuned, guys. It's going to be a good video. See you soon. All right, well, here begins our market recap for the markets closed 14th of October 2021. And when we look at a heat map here of the large companies in the S&P 500, boy, oh boy, it doesn't look like there was much red through the last session. Companies such as Intel, Nvidia, chip manufacturers, Google, Apple, Microsoft, all snapped back very, very hard. And it was a free-for-all in terms of the markets. But what you may not suspect is which actual sector did the best through the session. We'll take a look at that in a second. Nasdaq up 1.87%, S&P 500 up 1.68%, but all of them came charging out of the gates. So everything actually opened up over 1% for the session, and really it was about the futures market, and that's where our gap discussion will come in today, and we'll get back to that in a minute. But I do want to talk about the sectors, and we talked about this through the live sessions. XLB, for anyone in the private community, you know we were discussing this also on the Monday. This was the sector of interest this week, and it certainly came to the party in the Thursday session. XLB beating out technology, for some people to probably be a surprise. 2.43%. The hated sector becomes suddenly a cool sector to be in. That's materials. We had then technology, industrials, another sector that's been hated recently, financials, and all the way down the bottom, the one that was doing the best for the last kind of week, which was TAN, the solar index. I just wanted to bring that up because that was, of course, rolling out, hit a resistance technically, and now we're seeing that small amount of weakness. Do I think there's still a good sector? Absolutely. We need now to see further breakouts occurring. So before we get into the rest of today's video, I want to just discuss where we are with the markets. So we always expect like that September pullback. I mean, it's pretty common. It's a statistical fact. We've seen the history on it. But we also know that November and post-election years and October tend to be positive months. So look, we weren't exactly correct on August being the weakest month. It was September. These are the months that you start to watch it out. Now what we're looking for, though, is that ramp into October, November, and possibly we just saw the start of it occurring. So the question is, have you missed out? Have you got more potential? Now the stock market's still showing good gains for the end of the year. Well, I think looking at gap research could be an interesting one. So are gaps always filled, or every gap is filled? Well, in this study, of course, it doesn't apply to down gaps because it was specifically studied off a bunch of stocks as well. But what was found in this study is that 91.4% of all gaps actually fill. So 91.4% of gaps to the bull side end up filling. That's a 9 in 10 gaps get filled. So it's pretty close that things do end up closing gaps. However, when they do it, could be a little bit different. And some of the indices, specifically IWM, which is the Russell 2000, it can take some time before the gap is filled. And I think that's something we really need to bring into our consideration. So what gaps are we talking about? Well, the gap is the difference between where the market closed and the market opened. Effectively, this is the futures trading section. And yesterday, or through the session, we ended up having a very large kind of gap here. Now, we had a previous gap and it instantly sold back off and filled it. That's a good statistic. Then we have a gap here to the downside. Obviously, it ended up, well, filling that today. So it actually filled that gap up. Then we had the gap down, the gap back up, filled it again. So gaps in general are a strategy. They're not a statistically always going to happen strategy, but we just closed an incredibly bullish day. Effectively, we've gone now from a trough to a peak to a higher trough, and we've kind of gone into that. We are now looking relatively bullish. The question then becomes, will Wall Street want to push it back down and then pull it through? Because no matter how you look at this chart right now, there is a significant breakout here. The trend line down for the S&P 500 has been snapped with a bullish close. Now, in a lot of stocks, when we snap a bullish close, we tend to come back, retest that trend line, and then bounce through. If we did that, guess what? Gap filled. That would be a very interesting stat. And certainly there would be, I would think, a lot of buyers around this area. The bears have in many ways lost the fight here now. They've lost to the tops. While there could be still bearish kind of moves that pull the market through, there are several key reasons why that may not happen. I mean, one of the reasons is that we've created a base, and I think it really shows the most when we have a look at the S&P 500 and we take a look at the weekly. And the closure for the weekly will be important here. We have the bullish hammer, or the bullish rejection, the bullish rejection, the bullish rejection, all off the mean reversion, the 20 exponential moving average. If we end up closing this Friday and this Friday ends up bullish, guess what, guys? That's showing us that we've now got 4 rejections off the 20 moving average. It's compelling stuff. We've seen it in the past. It's compelling stuff. That effectively is showing people buying the dip. Now, whether it's Wall Street, whether it's retail, whether whoever it is, this is a very important factor. And do we believe at some point we will hit a 50 exponential moving average? Of course we will. In any great bull market, even a cyclical one, eventually you have those deeper corrections that come back to the 50 exponential moving average or a little bit deeper. But in general, if you believe we're in a bullish market here for a couple more years, these 20s, these 50s are certainly spots to watch. And at this point, coming into the Friday, we currently have a bullish look at market. It's really just the question of, do we fill that gap down? So let's try to understand what markets are doing from the perspective of where is it best to close the market on the Friday session for maximum pain. And we use options to figure this out. What's maximum pain? It's basically where if we could expire as many options as possible. So remember, Wall Street's writing options to all of us retail traders. Retail's in options more than they've ever been in any time in history. Not even the dot-com bubble can compete now with the amount of interest in the markets. Maximum pain is effectively the idea that if we closed at maturity date of a 439 on the SPY, we would be hitting the perfect level between all these puts expiring worthless, all these calls expiring worthless, and Wall Street getting the lobster lunch and the lobster dinners into the weekend. Effectively, they're celebrating, they're feeling very good. So a 439 number would be what we're looking for. The other thing that we're really thinking about and we're kind of trying to bring into our analysis is, do we believe there's any call walls or put walls? And in this case, we've really discussed this quite a few times, that there's a significant call pressure that's being put on that 450 level. There's a lot of calls sitting around 450, and we don't expect it to go, absolutely ballistic through the Friday section and be able to get up above that. So we'll go back to the SPY. Let's say we think 439 is the correct closure. That's the maximum pain. If we get that turnaround, we get 439, we're probably going to try to test that gap and then see whether we can go bullish. Again, it would still be a very good weekly close. And overall, still the market would be bullish. It just show you that they really like going for it. So that's something that to think about in the Friday session. This was a great big session of bullishness. We saw many stocks break against the trend. So they were all downtrending and a lot of them started to break out. A lot of sectors started to really hit past their resistances, and we keep all of that in consideration. But if you have missed it, if you're worried and you're feeling FOMO, in general, the market will usually give you one of those second chance offers, and possibly a gap fill might be something you're looking at. Let's move over to Tesla now and some of the stocks before we go over the Nasdaq, Bitcoin, and others. And I want to bring up straight away Tesla. A few people are disappointed with this one, but I don't really think you should be disappointed by the market continuing to go up. You've got to remember a few things. If you've been holding Tesla throughout this correction in the markets, what's it been doing? Grinding higher. You're up while others are still well down on their stocks. The other thing is it broke past 800 and it's at 818. That is not something, to be sad about. It's at multiple percentage points above the 800 at this point. Now, do we expect the 880 to be hit? Well, there's certainly a very compelling case to be made for that, but it's not going to happen overnight when everyone knows 800 is such a key level. Remember, everyone's looking at this chart, not just a few specific people, and we have earnings coming up in 6 days. So this is an exciting time, because part of the reason I think the market is showing this bullishness is that we're going into earnings season. What does earnings create? Optimism in the markets. Generally, markets are optimistic. Now, if the earnings miss, we might go all the way back down to that 50 exponential moving average on the S&P. But if earnings are in line and you believe they're going to be in line, beating, not giving really bad guidance, that kind of stuff, this is where these markets will tend to ramp. And we may be waiting for earnings on Tesla, and if it's good and there's no chip shortages, etc., and things look better, which is what we've been indicated, then we could be at that 880 in no time. Obviously, Tesla's still holding up. Let's take a look at the options market together, see if we can get an idea of why it might be slowing down a little or might be finding a little bit of weakness. So there are a lot of calls expiring here on the 15th of October for Tesla. We've got quite a lot of calls sitting around that 800 to 850 range. And of course, plenty of puts. Maybe Michael Burry, I don't know who's here, but someone is trying to short Tesla. And overwhelmingly, while the price action has been bullish, guess what's been happening? Somebody has been going bearish against it. And that's a mistake. And obviously, they're not going to make any money and they're going to lose all their money this week. We go then into the next week. What's happening in the 22nd of the 10th expiry, the 22nd of October? Well, we have here an 850 strike that's very, very much looks like a bit of a call wall. But we also have a huge amount of puts. So the good news is the puts continuously start driving behind. We've even got puts here above 800 now, where they're starting to get bigger than the calls. So negative bets on Tesla are massive. But the price action, again, has remained pretty solid. So next week, where do we think there's going to be some technical resistance? Let's say we get up to that 840, 850 range. There's going to be some really big options call walls. So we'll be watching that together. If you're interested in this stuff, remember to subscribe. We do cover it on the daily. And this stuff is fascinating to me, especially when you see a few expiries and you see how the market's manipulated around options walls, around key technical levels. Even if you're an investor, it's exciting stuff, and it's something that I think really changed the game in terms of the way that I perceive the markets, and hopefully you guys are starting to perceive the markets. Let's take a look at Apple. Apple, super important stock. Bad news came out about it this week, or perceived bad news. All of a sudden, we've gone bullish. Let's talk about this chart, because this really will push around the markets as well. We know it's a monster stock, and Microsoft pushed these markets massively. So we have a pretty compelling story again to show you that there's been buyers kind of finding the buying pressure. We knew that the bears had to push underneath here with a bearish close so that we could get our trend line. At this stage, coming into the Friday session, we effectively have all these weekly bullish wicks. And if we can keep holding like that, it certainly looks a lot better. Let's drive into the daily and then do the option stuff. Okay, daily looks pretty strong as well. Probably looking at that 145 closure plus to really give us that confidence that the downtrend on Apple is over. We have here previous supports, previous resistances. We'd be snapping off wicks at that point, and things would certainly look a lot better. So I like the Apple chart. I've always liked Apple as a company. It's super solid, obviously, from the perspective of what it does and the kind of ecosystem it's in. And, you know, I do have an iPhone. I mean, I'm sure a few of you are Droid fans out there will be like, oh, no, Tom's got an iPhone. But overall, I've always enjoyed the product. And yes, I would like it to get back above 145 from a, you know, carry through bullish perspective. But at this point, you know, I was also hoping that we'd get that deeper pullback. So, it's neutralized in here. I think it looks more bullish than bearish based on the weekly. And that's the way you've got to do it. You've got to put your opinion at the door and focus on the technicals. Focus on what you're really seeing. Knock out the noise and bring in your technicals into the zone. So let's have a look at the open interest. So come the 15th of October, what do we expect? Well, 145 is a big call wall. Then we have obviously all these poor people that have been purchasing above for calls. They're probably going to expire worthless come Friday, and all these puts expire worthless. So where's the perfect place for Wall Street to close the market for Apple this week? Well, guess what? It's right around the range they've got it. And it just shows again, the manipulation is there. This is the plan. This is where they make the money. And it's very, very good. We mentioned in the previous video that we also see, you know, this particular stock tends to do very well in October, mostly due to earnings. Just like July, it tends to knock the ball out of the park in terms of guidance, feeling good about the new iPhone, people are buying it, all those types of things. And we do know, of course, the iPhone was selling out online. Important to always look at the inventory levels, look at how far the kind of like lead is. Some people will say, well, that's due to chip shortages, and absolutely it could be. But there's some great stuff to learn here. And if you want to get these charts, you can get them over at fxevolution.com and just get a free 7-day trial to the private community and grab them all. See whether they're for you. And then, of course, what have you got to lose, really, for a 7-day free trial? So Apple looks pretty good on the charts, 145, bit of a key resistance. Tesla, overall, still looking very strong. Many hyper stocks starting to show really strong recovery on their channels, on their recovery charts, all of these trend lines being broken through. If you're interested in that type of stuff, watch our live streams near the close and watch the replays, because you'll find some really good information in there that hopefully helps you out. So we'll move over to the Nasdaq, and the Nasdaq also gapped up. So we can see the close, the open, big gap in here. And if we look at the statistics and we say, okay, 91% of the time these Nasdaq gaps will fill when they're to the buy side, do we know it's going to fill straight away? Not necessarily, but at some point it will fill. And that's the problem with these gap things. You know, it could go like this and then fill 6 months later on. Well, that's cool, but we want to talk about it right now. This is a bullish close. It's above the previous wick rejections. It'll take out a lot of stops that were here. Shorters will have gotten crushed today, because a lot of people will have had stop losses around 15,000 on the Nasdaq, and that's super important. But there are some benefits here, even if you're a bear in the market and you're thinking bad things. What we've done so far is we've held our ascending channel, and we talked about this at great length during this correction. We talked about this being a very big first level, and really our second level was only, about 400 points underneath, and at that point we didn't really think the Nasdaq could drop that much more from the perspective of a general correction. If we have this channel up, then what does this give us in the future as a predictive level for take profits, a predictive level for resistances? Well, guess what? The top of the channel. So we can start to see it come into the top of the channel. And if it does, guess what? At that point, you expect further selling. You expect that weakness to come into the market based on the technicals. So it's not always something that you need to be really concerned about when a market goes up like this, because there's always another trading opportunity somewhere. So gap close could be certainly an opportunity for some people to pick it up. This is a bullish close as far as I see it. Really, if you drew like the trend line through here, again, this is another one of those days where it snapped that trend line. If you look at most stocks in the market, when you snap a trend line, you have begun the first step of what we call recovery, and that's something that's important to think about. QQQ is the same. The weekly is also compelling as well. If we look at the last week, you'll notice it's a long leg doji, so that's an indecision candle. Buy and close around the same level. We've got the high, we've got the low, and at this current time recording, if the weekly had closed, it would close bullish against that, which is again a bit of a reversal signal. So we'll see whether this can hold up, and we'll keep watching it. I want to bring IWM in because IWM got back above 225, and I just wanted to show the gap. And the reason I want to do this is because you have previous gaps in IWM. Let's say we have, gaps like over here where it gapped above. Now you'll say, okay, well, you say that 90% of gaps fill and on the buy side, and that's just a statistic I've taken from obviously someone else's research. But overall, yes, it did fill, but look how long it took. So just remember, it's not always going to happen straight away. It is part of a strategy that you can apply though, and gaps are something that you can look for. Let's move over now to Bitcoin and take a look at this one. So Bitcoin's starting to consolidate here, and that's good news because what's happening is the money is now flowing a little bit out of Bitcoin, and it's starting to go into, guess what? No surprise, Ethereum. Ethereum broke our resistance, 3,600, closed above now, and that started that ramp. So that ramp's moving through. Ethereum's next big resistance is around that 4,000, and certainly people are feeling pretty good on these markets. Now, what's happening at the same time? A lot of alts, a lot of alternative coins are weakening. So they're weakening as we see the money flow into Ethereum. This is kind of traditional with that normal move. We see the king, Bitcoin start. So BTC starts, then ETH kind of comes in. Then you start to see your ADAs, your dots, all of those usually start to go, your links, your chain link, etc. all start to get a bit stronger. And then we see those kind of like smaller alts. They tend to also find the ramp after that. So it could be that we're entering that first step of the alt season. Bitcoin still has to hold up here for the rest of the market to be good. It's kind of like the index, really. Ethereum and Bitcoin are like the indices. If Bitcoin leads, like the SP500 leads, then we feel better about the market, people get confidence, and then they start to bring that confidence into the other coins. So something to watch. In terms of economic news, 8:30 a.m. New York time, something to watch out for is going to be core retail sales. This will probably knock the market around a little bit depending on how it comes out. So that's certainly one bit of news that people will be looking at. And I also want to remind people, just again, we had 7 months of win streak. Overall, the statistics are that if you have 7 months of win streak, you tend to also see further follow-on bullishness in the markets. And we can see this with 6-month win streak. After that was around 93% chance that a 7.9% or better market was going to be ensued. Another thing is that we always talk about pullbacks and how many pullbacks are out there in a year. Usually it's a few. So we're talking about 1 to 2, on average about 4.6. But in most bull years, after, let's say, a crisis period, which pulled back really, really hard, as we see here, 12 and 24 during the global financial crisis, we start to really consolidate during those bull years. And it's usually around that 2 to 3 area. So in general, if you're thinking of being bearish in the markets, most of the time, it will only come back 2 to 3 times in the year, unless you've picked the pure crash year. And I think that's something you want to always keep in the back of your mind. Hope you enjoyed the video. If you did, smash that subscribe button and of course, give us a like. Thanks so much, guys. And down in the comments below, what is your favorite stock that you've been picking up during this correction? Let us know. I'm super interested to see which one you've been picking. Bye for now.